Have you seen your credit scores? Now, the credit scores range from 300 to 850. You're somewhere in that range. And I want you to think about what you need to do to get yourself as close to 850 as possible. Now, I certainly understand that there have been things that may have happened in the past that may have resulted in a derogatory mark or two on your credit report. What my goal is here during this section is to give you what I call credit lifelines so that you can begin to start to think about things that you can implement that's going to give an immediate boost in your credit situation. So whether that's actually paying off debt to improve your credit score, or it could be actually resolving some credit challenges that's been hanging out there for a while. Either way it goes, I want you to believe that you can get it done by just simply following the right strategies along the way. Hi, we're going to go over debt management and credit improvement in terms of what to do at various stages of your credit scores. Now, as you can see here, we have 4 different ranges, and these are on purpose. These are very deliberate, and based on my experience with all the different types of situations I've seen over the years, I've categorized these based on what I've seen to be best practices of how to get things handled in each of these areas, and I'm going to go over those for you. Now, I want you to understand that you are going to fall somewhere in one of these areas, and notice how I've labeled them here. The first range from 300 to 520 is stop the bleeding. In that range, something has gone on or is currently going on that's causing the scores to be tanked out, really at the bottom level of the ranges, and we need to do everything possible to stop whatever that's causing that to happen. The next range is 521 to 619. That's what I call the credit building stage, because you can get credit when your scores are within that range, but it's very expensive credit. You're going to get higher interest rates, you're going to get higher insurance premiums, everything is going to be very expensive in those ranges, and so I totally recommend doing credit building activities if you are in that range. The next range from 620 to 719, that is what I call the strategic debt management range. This is where it's going to be very pivotal because you're going to make the jump between 620 to 719, and this is really where most people fall. Most people in America are in this range here, and I want you to make sure that we're doing the right things to make that happen and pretty much stay there. And then the last range is from 720 to 850. That's the higher echelon of the credit score range, and I want to talk about the debt payoff implementation activities during that range. Now, understand this, that when you are at the 720 credit score range, anything above 720, you're going to get the best interest rates and the best types of offers on any type of credit or financial product. So I just want you to understand that. The statement I made earlier about being in the 620 to 719 stage in terms of I want you to stay there, what I meant by that is I want you to stay in that frame of mind. Stay in the frame of mind of being very strategic about your debt management, because that's certainly going to carry over when your score goes above 720. Those habits that you develop in this strategic debt management stage is really going to help you in the final stages. Now, let's get down to the nitty-gritty and see what to do at the various stages of credit scores. So again, the ranges is from 300 to 850. And so what we have to do is determine what your score is now. And the whole point on this is to help you to get deliberate with your credit improvement plan. In other words, do it on purpose. You have to do things in a meaningful, purposeful way so that you can move yourself along this scale. Now, we're going to start at the bottom of the scale, 300 to 520. If you are in that range, I want to say you have to pay the most recent derogatory debt off first. Doing that is going to stop the bleeding, as I mentioned earlier, because what's going to happen is those things that are derogatory in this range and they're active, let's say they're recent accounts that went bad. And so you want to make sure you get those things paid first. Now, I'm going to suggest that you make lump sum payments, and those can be negotiated with your creditors. It just simply takes a phone call and you make them an offer. Now, I can't tell you that's going to work 100% of the time, but it's certainly worth the shot. So here's some specific things and activities for this range. Number one, find the most recent delinquent debts that you have within the last 12 to 24 months and plan to pay them off in the order from most recent to the oldest. You want to pay the most recent derogatory debt first. Don't pay the oldest one first. Pay the most recent one first, because the most recent one is impacting your score the most right now. Then the next step I want you to do, if the account is a collection account or a credit account that's closed, you want to negotiate a lump sum payment instead of making several small payments. You want to make one payment that you can negotiate with the creditor or the collection agent at this point, because you just want to get it over with. Okay, so that's what I mean by that. You want to definitely do that. You don't want to be making monthly payments to collection agencies anyway, because every time you make a payment on a collection, it triggers the credit scoring model to ding you on your credit. So your credit does not improve very fast if you're making monthly payments on collection accounts. You want to pay the thing one time, get it over with, and then the next month it goes to zero, and then that's going to help your score better. The next step is, if the account is an open active credit account, you want to pay off the delinquent balance and resume the regular scheduled monthly payments, right? You just want to bring it out of delinquency and then go ahead and keep going with the normal payments. And then the fourth thing is stop bleeding. And that's the overarching attitude I want you to have if this is your score range, because you just got to do everything possible to make sure that you're not inflicting any more damage to the credit scores. Now, the next score range is between 521 and 619. If this is where you are, you want to stop all negative score risk factors. In other words, anything that could potentially be causing your score to drop, you want to stop those things. This is a little bit different than the other range where I said stop the bleeding. But basically, this is the next level of that. Let's assume that you stop the bleeding and now you just have certain things. Maybe you're carrying too much balances on your accounts, your credit accounts, or maybe that you're always paying late and then you get the 30-day mark on the credit report or the 60-day mark. Those are the kind of things that I mean by when I say stop all negative score risk factors. As a matter of fact, when you get your credit reports with the credit score, you're going to see the risk factors. It will tell you the top 5 factors that are impacting your score, and you want to mitigate all the ones that are negative. Okay, that's what you want to do. And then I say start credit building. So let's look at some activities to do in this range. The first thing, you want to review your report for accuracy. That's first and foremost. Make sure that all the accounts that you have listed are being reported the way they're supposed to. And if there are things on the credit report that you do not know what they are, they're unfamiliar to you, unknown, you want to get those things removed, because if they're impacting you negatively, you certainly want to get that handled right away. And you can certainly get those removed by writing the credit dispute letters. The next thing, I want you to bring any open active delinquent accounts current and resume making normal monthly payments on time. So again, you may have saw this step before in the prior range. I'm going to mention to you again, that thing still applies. You want to make sure that all your active accounts are not delinquent. So if you have any delinquencies on any account, bring them current and then resume your normal payments. And if appropriate and if possible, add another credit card or loan and start paying it on time. Now, again, that's why I said this is the credit building stage. And so you want to get more credit and make it good. In other words, I don't want you to get overextended. I'm simply stating you're doing this to build your credit, because it actually takes credit to build credit. And I know that's kind of counterintuitive, but that's the way the system works. And we're only going to do this for purposes of helping you to increase your score. And then finally, step 4, don't allow any new derogatory debt onto your credit reports. Again, along the same lines of stopping the bleeding and making sure you're not doing any more negative stuff. You don't want any new derogatory accounts in your life, period. That applies at this stage as well, okay? Now, the next stage is between 620 and 719. We're going to continue with credit building, but we're going to do a little bit more strategic debt management. And so here we go with that. Number 1, if you have credit cards, if possible, spread those balances across 2 or more cards, making sure that no card has more than 30% of the high credit owing. I want you to avoid consolidating all your credit card debt onto one card, because that really trashes your debt utilization ratio when you pack all of your accounts or consolidate all your credit cards into one card. You close all the other ones out and you have this one card with a huge balance. That actually goes against you. And so I don't advise that at all. Now, there are some exceptions to that, and I can talk to you about that individually. So if you want to discuss that, let me know. We'll talk about it. But I just want you to understand that for all intent and purposes, for most people, when they consolidate, sometimes it tends to hurt them. Now, consider taking out a personal installment loan to pay off all your revolving debt or pay them down to the 30% of the credit limit. Now, here's the caveat to this. I'm saying go out and get a loan if you can. Reduce all your credit card debt. Now, specifically, I'm mentioning credit card debt, and I say revolving debt here. That's the official name for credit card debt. But you want to definitely, if you can, pay those things down to 30% if not paying them off. Now, what I mean by 30% of the high credit limit. When your balances on your credit cards go down to 30% of the high credit limit, that card is actually going to help boost your score because the card has 70% or more available in you to be used, but you're not using it. So your debt utilization ratios go down, and that is rewarded by the credit scoring system. Now, I said go out and get a personal installment loan. Now, if you can't get a loan, you can certainly just continue to pay things down until they get to this level, or maybe there's other things you can do. Maybe just put tax refunds back onto these types of debt, or other lump sums of money that you may get from time to time. You want to pay them onto your debt. You can do that in lieu of getting an installment loan. But for some people, it's easier to go out and get an installment loan and do that versus waiting for a lump sum of money to come from somewhere else. The third step in this range, I want you to request your creditors to lower your interest rates on all your accounts. Refinance all loans that are eligible. As your credit scores are increasing, that means you become a lower credit risk. Make the phone calls, call the creditors, tell them your credit score is higher than it was, and ask them to reduce your interest rate. That is a very prudent thing to do. People do it every single day. Why not you? Make the call, have them reduce your interest rates based on your higher credit score. That's actually going to lower the interest, that will lower the payment, and thus put more money back into your pocket. And then the last step in this range is to establish your own permissible purposes for the use of credit. In other words, just don't use credit just for the sake of using credit. Figure out what instances that is going to give you the permission, if you would, to use the credit, and only use it for those purposes. Don't be frivolous, because you're trying to make sure that you get yourself to the higher end of this range and ultimately into the next range. So just be very prudent in your use of credit. And finally, the last range from 720 to 850, we want to keep your debt utilizations low. And so therefore, you want to implement debt payoff methods. And so this is where we're looking at really actually retiring the debt. So here's the first step. You want to potentially do the debt snowball, which you want to pay off your debt from the lowest balance to the highest balance. Now, I've talked about the debt snowball here in this course, and so I won't go into it here, but just know that using this debt payoff method is paying the lowest balance to the highest balance. That's the order of the payoff. Or you can choose to do the debt avalanche, which is paying off the debt from the highest interest rate to the lowest interest rate. Okay, either one of these is going to be very awesome for you. And as we explained in the other section of this course, that the differences between the debt snowball and the debt avalanche, I definitely want you to make sure that when you are at this score range, now you don't have to be at a 720 to 850 in order to do this. You can do this debt payoff method at any point in whatever range you are. But since we are trying to get you to a higher credit score range, the things that we've talked about up to this point was helping people to build themselves to this range. So if you are in this range and you still have debt, you want to choose one of these two methods to pay off the debt or to get them down as quickly as possible. And then again, I'm going to bring that same theme over from the last range. I said you get a permissible purposes for the use of credit. Now here I'm saying use credit only when necessary. Okay. So again, we're trying to be very prudent in the things that we do in regards to the credit so that the scores are supported by great behaviors and positive credit activity. Then finally, here are my recommendations, and it basically just summarizes what we just went through. First of all, for any of this, you're going to have to determine extra money out of your your plan to put on your debt payments. Okay, figure out what that is. In other words, reallocate spending in one area towards your debt plan. Then you're going to review your credit scores, and you're going to see what range that you're in, and then you're going to follow the steps for the score range that you appear in. And then finally, you're going to make it happen. In other words, you're going to do the things you need to do to hit the top of your range, keep going, and keep only what's needed in terms of your credit. And so this is kind of the plan that I want you to follow, especially if you're concerned about your credit scores while you're looking at paying off your debt. Do the things that I've mentioned here, and you will find that things will definitely improve.